Yeah, no, it's absolutely right, Scott. They have their own doubts, and it really gets to what Josh was talking about. You can have things work out with the Fed, not modestly, but relatively quickly raising rates up to some form of a neutral level. And you get all that help from the supply side. You get those bottlenecks clear. You get consumer spending declines because you have the fiscal headwinds or their savings run down. Or you can do it the other way, which is you can actually purposefully bring the economy into recession, have demand destruction, because you have the imperative of getting rid of inflation. And that's really what the Fed doesn't know what it's going to have to do. It doesn't also quite know how this whole issue with Russia is going to work out. And, Scott, can I just take 1 second here off the cuff here to compliment Lebenthal, Jim, on his blue and yellow tie and shirt right there. That used to be in 10 years ago, and now it's in again.
It is.
Those are the right colors, my friend.
Now, from what you just described...
Those are the right colors now.
They are. For what you just described, it seems to me that the latter, until it isn't, is the most plausible outcome. That the Fed, I think, believes that the latter is where it's really going to have to be at. They're going to have to do what they have to do to tamp down demand and suppress inflation. Because the other thing's not going to happen quick enough. Even if it starts to happen, it's not going to be quick enough, Steve.
You know, Powell starts talking about the idea that we're not going back to the old paradigm. I thought that was really interesting, maybe a little underrated. A lot of the Fed's optimism last year was based on the idea, hey, we did globalization, we had low prices, why would we not go back to that world? And I think he's kind of given up the ghost and going back to that world. I think he's concerned about, he's talked about this publicly, the wage price spiral could happen. It's something that he's concerned about. And I think the other aspect of this, Scott, is that the Fed needs to get the confidence back of the general public and let them know that they're willing to do what needs to be done to get control of inflation. Because if they don't, that's when it runs away from you.
Oh, man, the credibility issue.
That's a higher VIX regime.
You
that's
haven't
true.
heard anything yet. Jim Lebenthal, I saw you raising your hand. You wanted to say something. What is it?
Yeah, and it wasn't just to remark that Brooks Brothers has gone into bankruptcy, but maybe that's apropos of Steve's comment. On a more serious note, though, I would point out, and I'd like some feedback on this, that we are 2 weeks past the first Fed rate hike of this cycle. Historically, that's been a fabulous time to invest. Historically. We've had at least a year, in most cases 2 years, of double-digit S&P 500 returns. Now, I'm listening to you, Scott. I'm listening to you, Steve. Listening to you, Josh. I hear the negativity. I'm not blind to it. I'm not blind to why that approach is there.
Is it realism or is it negativity?
It feels negative, Scott.
Well, maybe it's just real.
It feels to, maybe it is, but to me it feels negative. And I just want to point out the positive, that the Fed funds rate right now is 25 basis points to 50 basis points. On any level, that's ridiculously low. If they raise another 50 basis points in May, it's going to go to 75 basis points to 1%. And I'm just not crying about that. I'm still going back to history and saying this is a great time to invest. Tell me I'm wrong.
I want to respond to that. I think that's a really good point. I mean, the Fed is probably going to get to neutral at the end of this year. You could argue they should be at neutral right now, so that whole year is a gift. The thing we're legitimately debating about right now is what happens in 2023. I don't think there's an issue. And I also should give the Fed's other part of their outlook its due, which is that Powell has said specifically that he believes the job market and the economy can withstand the rate hikes, and it's kind of mid the horizon like this year. It's really a debate right now about 2023 and where you want to be. Lebenthal's absolutely right that you have a gift this year, even if you do 8 or even 9 rate hikes this year, not crazy. But let me just throw one area of caution out there, Jim, which I think you know. There's a debate inside the Fed over the following. Is it the level you arrive at that causes things to be hairy, or is it the change? And if you're going to lay on 200 basis points of tightening this year in the funds rate, then there's possibility of some dislocation, hedge funds, different financial players out there, from the rapid change, not just to the level, but there is an area of concern about that. And Josh mentioned it earlier when he talked about rates and balance sheet. Those are the things that I think the Fed is concerned about, and they're going to watch carefully. It's why they talk about being nimble.